Good afternoon, everyone. This is Brad Matheny. I thought I'd try to do one more video before the markets close. I know a lot of you have had some questions about my research and what I'm doing. And to be honest with you, this move up here into this excess phase peak pattern, remember I suggested looking to try to go short in this area off this move up here that I believed was a peak off of this flagging here through consolidation up into this peak. Okay, then we rolled through this sideways mode. We came back up in this area. I told you guys I was getting short here. I'm going to end up taking some losses on a couple of shorts. Got a couple more trades, I think 3 more trades that carry out until this area, June 15th, 16th, 17th, and out into early May, and out into June. And we'll see what happens. But, this is part of trading. And what I decided to do, instead of getting into the SPY and trying to catch this move, I decided to get into some spider sectors. Now, remember, the spider sectors are kind of handy in the sense you've got energy, you've got utilities, you've got technology, you've got basic materials, consumer staples, consumer discretionary, you've got industrials, you've got communication sector, you've got healthcare, financials, and real estate. So you can play these instead of the SPY, the QQQ. Instead of the QQQ, play XLK. Instead of playing the Dow Jones, play XLI. Instead of potentially playing the SPY, you can play XLF, which is the financial sector, or mix it up a little bit. You can also trade things like, SDS, SSO for the SPY, and you don't have as much risk typically. So again, it depends on how much risk you want to take. Trading the SPY and the QQQ, especially in these bigger moves, remember we're up 1% again today, can be very risky. So again, I'm prepared to take my lumps. My lumps right now are only about 8% of my total portfolio. So my portfolio is up over 1,000% this year, and so far. So I'm prepared to take a little lumps. I'll still end up positive and can rebuild if I take a few lumps. That's trading. And I do take lumps. That's losses. That's just the way it is. So remember, we had, through my research, we had this bearish, bullish above, bearish below. Obviously, at this point, anything above this level was bullish. And as I highlighted to you, we had moved into this rally phase here, which was this big, broad, this is a 1-hour chart, which is big, broad flagging off of this move. You can see that we had come down off of this into consolidation, and we had also moved off of this big excess phase peak move into flagging, and flagging is generally bullish, guys. So as I've been calling for this top to set up, I believe that it's really still a valid pattern and that the markets will roll downward, but I was a bit early in this move, and we are still technically in bullish trending. Until we fail and start to break down, we are still technically in bullish trending. But what I wanted to highlight was this, and that is the spider sectors with my algos are completely flat. Completely flat. There is no trade on the daily sector in the financials, XLI, nothing. You can see here in the VIX, QQQ, we have no trades, absolutely zero trades. When we come back down to the 60-minute algos, we start getting into some trades. XLF is long, it's up off by 0.22. These are newer triggers from 5.8. Today, this is 60-minute, 5.8, 5.8, 5.8. We're getting, and these are just recently, 12 o'clock, 12 o'clock, 12 o'clock. all of these at 12 o'clock. When we go down to the 15-minute triggers, we have some that are up a little bit. IYM or IWM, XLI, the industrials up 0.62 has already hit both targets. XLY up 0.20. Looks like it just got into a trade about a half an hour ago. And we go down to the 5 minutes, and you can see completely flat. Now, when you're looking at these triggers, let's go back to the daily. You're looking at these triggers. There's two things that I like to look at. Okay, number one, the thrusting system. The thrusting system represents short-term, call it market thrust or market pressure. Think of thrust like, a jet engine. So you could be full throttle, okay? Full throttle bullish would be green like this. That's bullish full throttle, but at a 30 level. So typically anything 30, 40, 60 is pretty good to the upside. Anything kind of like this 22, 23, or minus level here in darker green, or 7, 9, or minus 35 here. These aren't so good. This is a pullback or moderate trending. 22 is moderate upward trending. 7, 9 is just barely upward trending, but still in a general uptrend. That's what the green tells us. Red indicates that we're in a downtrend. Minus 15 is moderate. Minus 18 is moderate. We call it intermediate moderate. Plus 28 means that it's in a downtrend in red, but it's pulling higher right now. That's what the plus 28 means. Minus 8 is very moderate, very slight downward trending. Now 20 in purple, this is a rotation of the red trend. So you basically get the light green for stronger trending, the darker green for moderate trending, and then you get the dark red for bearish trending and the purple for moderate bearish trending, kind of like a reversal or a stalling. And what you're going to be able to see then is the shifting and the bull bear rank. So 4s are generally positive, negative 4s are generally bearish, 2s mean they're pretty much going nowhere. And it ranks again. I've tried to show this to you, but it ranks basically, let me scroll this out of the way, and it ranks kind of like this, okay? So 0, 1, 2, maybe not quite that excessive. 1, 2, 3, 4, 5, 6, 7, 8. So basically these are ranking 0, 1, 2, 3. These are basically trends. So you can see sloping upward. We get an 8, you're going to be trending up like this. If we get a 4, you'll likely be trending in this manner. If we get a 3, you'll be likely trending in, or 2 or 3 in that kind of a mode. So 4 would be more like that, slightly upward. So again, think of them as angles or degrees. So when you come back over here to these algos, which again are on my website, but again, the point again is I'm not seeing any trends. I'm not seeing anything I want to trade. And even if I come down here and I look at these 60-minute scanners, this is the end of the day. On a 60-minute chart, I don't take any trades if they're on these last hours unless I care on holding them overnight. Everything except for this one, 1500. This is East Coast time. Sorry. So this is East Coast time. 1500 would be right now. A new trigger. 12 was 3 hours ago. And so what we have here is these new triggers. I'm not going to be chasing these. I could go down to the 5-minute and start chasing these if there were any, or the 2-minute, and the 2 minutes all short. So the 2 minutes telling me that, the markets are in a pullback, and technically we have a bunch of short triggers that generated within the last 4, 5, 6 minutes. And this is how many bars it's been in the trade. So basic materials is going down, financials are going down, SPY is going down, real estate's going down, mid cap's going down, communication sector is going down, healthcare is going down, and industrials are going down. And you can see the -4s over here with the ranking. So those are moderate downtrends. And you can see the negative numbers here. So -4 with a -40 is pretty good downtrend. -30 is a pretty good downtrend. -39 is a pretty good downtrend. So you can see how these algos really help me determine what I'm going to potentially trade. Now let's look at the Fibonacci or the ETF algos and go off the dailies. So what do we have here as far as dailies? We have QID is short, which is obviously an invert. And so it's been short, meaning the markets have been long since 428. USRT has been long since 5.5. IYR has been long since 5.6. QTech has been long since 5.5. XAR has been long since 428. And you can see the profits over here. And if we hit targets, you'll see them listed here. SDS has been short at 21 from 428, 8 days ago. IBIT is long from 425. KBE, IGF long, IGV long, and you can see the profits. So when I'm talking to you about these setups in the morning, obviously I'm talking about general trending, okay? I'm talking about what the patterns look like, what my cycle patterns say, what I expect to see setting up in the near future. And what I want you to be aware of is that specific algos, specific techniques are then applied to my analysis to try to teach us or keep us on the right side of trend. And it basically comes down to this. When you come back over here and you look at these algos, what we try to do is I try to teach people, look at the dailies or the 60 minutes. And this is your general longer term trend. Okay, all of these, well, GDX is short, ITA is long from yesterday. Trying to see if here's another one from yesterday, hit both targets, up 2.37. Here's another one, IHI, up, hit both targets. And here's another one, up, hit both targets. QTech, up, hit both targets. And what you're really looking for, again here, guys, is the follow through on the thrusting pattern. Okay, so obviously we want to see something thrusting upward. Here's, for example, FBTC, new long. It's off 0.29%. It's a brand new long. This means that, you know, if we get confirmation on the daily or on some other interval as a long trade, we're looking at Bitcoin ETF potentially moving higher. Now, what we would be looking for is we would then be looking for this ranking level to continue to increase up into 3s and 4s and 5s out over here. But we would also pay attention to the profit factor and win rate. 7.73 is a pretty moderate profit factor, and the win rate is 1.33. Let's see if I got it right. Yep. So when you get into something that's like this, 1.23 and 2.52, that's a much better win rate and profit factor. That's something you can rely upon. You can trade maybe a 3/4 or full position. When you get into this 0.73 to 1.33, or like this 0.95 to 1.56, to me, that's a half or a 3/4 position. Okay, same thing here. This is a half or 3/4 position. Sorry, this is a half or less. This is a half or less allocation. This is maybe a half to 2/3. This is a 3/4 to a full position. This is 0.80 to 74, probably about a half to 3/4. Again, 60 to 1.13. This is probably a half. 96 to 1.64. This is 3/4 to a full position. 0.51 to 0.97. That's really a third to a half. 0.70 to 1.3. That's about a half position. 0.91 to 1.87. That's, maybe a half to 2/3. And you can see how I can use these win rates like this, 1.55 to 3.06. That's a good solid win rate and profit factor. I should be looking at least a half or 3/4 allocation on this trade. It was as of today at 10 in the morning. It's already up, hit both targets. It's up 2.48% on the trade on 60-minute charts. Beautiful. Absolutely beautiful. Started at 10 a.m. this morning, and we're up quite a bit. Here's another one, Jets, 1.03 and 2.05. Okay, this is a pretty good number as well. I would say this would be a half to 3/4, maybe a little more. And again, it started yesterday at 10 in the morning. It's been in the trade for 15 bars. It's up very cleanly and up 3.62%. Here's another one, IYC. This is 60-minute. Started yesterday at 11 a.m. And you can see the 7.0 to 1.18. That's maybe a half, maybe 2/3 allocation. And the idea here is I want you to understand that even though I'm giving you these types of recommendations of to what's coming, I am not giving you these. I have periodically shared them with you, but this is subscriber only, okay? And I want you to understand that basically I'm not, because of this daily being completely flat, I am not looking at any broad term trend. We have no trading, no triggers on these daily spider sectors. So financials have no trigger, industrials no trigger, technology no trigger, real estate no trigger, IWM no trigger in any of these sectors. Energy, utilities, QQQ, healthcare, consumer discretionary, absolutely flat. So technically what we want to be doing right now, guys, in this mode is protecting a bunch of capital, taking very small trades, not trying to do anything because we do not have any confirmation of any broad sector trending. When we do get confirmation of broad sector trending, you're going to see, most of these turning bullish. And again, we're getting fours, which is good, but no triggers. A couple of -4s here, -4 here, -4 here, and XLV. But, we're not getting any clear definition of upward or downward trending, which means that we are moving into kind of a sideways consolidated phase, which is what I've been telling you. Now, remember, we are still in that 85% cash mode. Remember, way back over here, daily, back in October, over here, August, September, October, right over here, I recommended everybody move to 85% cash. And we are still in that mode. We are not out of that mode yet. That happened right over here. You should be essentially holding more cash and trading only 10 or 15% of your total equity right now. Yeah, there's a lot of movement in here, okay? But if you get to be super aggressive, you're going to take some big losses. This is where you want to kind of pare back in what you're doing until we get some real clear trending taking place, okay? And I'm still looking for, as I mentioned to you in the other video, I'm still looking for that deeper low back out here in October, potentially to set up an area where we can start moving into maybe, 30 to 40% cash buy zone. So my research hasn't changed. Now we're playing this mode out. And obviously, if you have been trading smaller quantities, like I suggested, you wouldn't be taking big hits right now. You'd be basically taking very small 1, 2, 3% hits on your total account. If you went all in, then you're probably trading inefficiently. Anybody, honestly, who goes all in on trades all the time, you're going to take some hits, and nothing I can do for you. That's bottom line. If you want to be a gambler, I've said it before. If you go to Vegas with $10,000 and put $5,000 on black and lose, you've lost 50% of your money. If you do it again and lose, you're broke. That's how I look at trading with kind of an all-in mentality. If you were to go with $10,000 and, put $100 on black, you're going to survive. You might take a little hit, but you're going to survive. Okay, so understand that's the way it works. So if you're going to be aggressive, you're going to take hits. I know everybody wants to see those big wins. I know everybody wants to see, the great, returns. But again, I'm not going to be able to give you these. Okay, these just don't come with the free videos. These are proprietary. They've taken years of research. They do a pretty good job. I mean, look at these setups. Well, 5-minute doesn't have any. 15-minute, we don't have much, but XLI, 2 targets, 0.80. That's a nice little profitable trade. XLY, 0.53%, hasn't hit targets yet. Nice little trade. IWM, 0.30. Pretty simple. That's what these things do. They're pretty simple. They do what they're supposed to do. Come back here, 15-minute. They do what they're supposed to do. Look at this. Ether, 44 days long, up 7%. Nugget short, 1.54. GDXJ short, 0.75. And we got Bitcoin, GBTC up today at about 3 hours ago, up 0.13%. So these algos are lifesavers. They can tell you, what to do, how to trade, and what to look for. Okay, there's Ether again. ITA up 2%. SOX up 2.65%. XOP up 2.7. IVG. Some of these newer ones, they'll go plus and minus for a little bit until the trend settles. But again, I wanted to tell you that, like I said, I'm not overly aggressive because we're not getting a lot of daily trade triggers here with my algos. So markets are really struggling for direction right now. And that's what I wanted to point out here. And we're going to still struggle, guys. That's just the way it is. The markets are really struggling to get out of their own way. So what I like to say. So right now you can see we've flattened out. We've consolidated. We're probably going to just flatten out. And we'll see what happens tomorrow. Okay, guys, look. It's trading. The idea is to protect capital and make sure you can live to fight another day. It's better to get small gains often versus big gains sporadically. All right, guys, talk to you later.